What's up, everyone? My name's David Mirynech, and I'm the founder and CEO of FanClub Sports Capital. Really excited to welcome you to the very first episode of the Owner's Box podcast. Every other week, we'll be discussing all things sports finance, M&A, and more, some of the biggest names in the industry to give you unique perspective and insight on what's happening in the world of pro sports ownership.
David Mirynech runs FanClub Sports Capital. All views expressed by him and the guests on his podcast are solely their opinions and do not reflect the views of FanClub Sports Capital. You should not treat any opinion expressed by Dave or his guests as specific inducement to make a particular investment or follow a particular strategy, but only as an expression of his personal opinion. This podcast is for informational purposes only.
First up, we're going to do a quick rundown on updates surrounding the biggest deals in the industry. And we'll actually start with the recent news around Major League Baseball. Arte Moreno is keeping the LA Angels for now. And apparently, according to reports, Moreno could have seen a return over 13 times what he paid when he first purchased the team from Disney in 2003 for $184 million. But he wants to try and continue to build a winner around his core of Trout and Shohei Ohtani. And it's interesting because a potential sale was widely predicted to net somewhere in the neighborhood of 2.5, probably upwards of $3 billion. And Golden State Warriors owner, majority owner Joe Lacob, and also the Los Angeles Times owner, and I'm going to butcher this name, Patrick Soon-Shiong, had been rumored to be among those interested. I think without any insider knowledge of the information, I'm probably betting that Masayoshi Son and the team at SoftBank also expressed a good degree of interest. There was sort of a mystery Japanese investor involved in this deal. And Masayoshi Son has invested in clubs in the past, like the SoftBank Hawks in Japan, Inter Miami CF in Major League Soccer, and actually the Ultimate Fighting Championship. And I just feel like Japan's biggest star in Ohtani in a West Coast market would probably be too good to pass up, but doesn't feel like there was any kind of resolution here. What's the bottom line here? At the end of 2022, we had two clubs for sale. There were the Angels, and then we had the Nationals as well. And that deal looks like we've hit a bit of a pause button as the Ted Leonsis-led acquisition group and Monumental Sports, I think, tries to grapple with the fact that the Nats are actually currently locked into their own regional broadcast deal with the Baltimore Orioles. And this kind of renders the fact that Monumental, who just went out and acquired NBC Sports Washington and their own regional sports broadcast network, sort of moot in the short term for any potential deal. And Manfred has sort of repeatedly said that he would like both the A's and the Rays to resolve their respective situations before expansion will be on the table. And I guess what that means is just, while it looked like we might enter 2023 with a flurry of deal activity in Major League Baseball, around the Angels, around the Nats, around expansion, kind of feels like everything's just a little bit locked out right now. So it's funny, we're already on our first episode and we're updating our old recordings as new information comes to light here. But something we did want to bring to your guys' attention is just how all this information around deal activity in Major League Baseball is coming on the heels of news around Diamond Sports Group. So Diamond Sports Group manages Sinclair Broadcast Group's 19 Bally Sports regional sports television networks, and they are reportedly filing for bankruptcy, according to Bloomberg. And why does this matter? Well, these regional sports deals make up a significant portion of TV revenue for NHL, NBA, but I think most importantly, Major League Baseball clubs. And to put that in perspective, the St. Louis Cardinals are presently earning $66 million over the last 12 months from Bally, from their 15-year, $1 billion deal they signed in 2015. So I think as we learn which clubs are impacted the most by this, the uncertainty of how this impacts clubs on a league-wide basis could actually deter deal making in Major League Baseball for the foreseeable future. All right, next up, we're going to move on and talk about the Iconic Acquisition Corp and Eagle Football Holdings SPAC. So, U.S. businessman John Textor recently purchased Olympique Lyonnais in League One. And what we're finding out is that was part of a bigger move. So he is bringing his entire multi-club ownership model, Eagle Football Holdings, public via SPAC merger with Iconic Acquisition Corp, and ultimately intending to list it on the New York Stock Exchange at a $1.2 billion valuation. So for those of you that don't know, Textor is the former ex-chairman of Fubo TV, and he owns 78% of Lyon, 40% stake in Crystal Palace in the Prem, and has multiple other clubs in other parts of Europe and South America, such as RWD Molenbeek in Belgium and then Botafogo in Brazil. We're seeing multi-club ownership has definitely emerged as the dominant ownership model within pro sports. Essentially, it's the idea that owning one club offers positive economics, but owning multiple assets offers much greater benefit to the bottom line, with the ability to centralize an operating model, marketing, player development, create portfolio-wide synergies across brands, academies, international friendlies, things of that nature. And for the past decade, as many clubs have sort of struggled, single clubs have struggled in the public markets. And the idea behind a public MCO is that you have a much more robust business model and revenue lines with multiple clubs, and then also the ability to add adjacent businesses such as sports tech. We've seen player agencies, marketing, and I think for the audience, the best examples of sort of these multi-club models are Red Bull, probably the pioneer of it, City Football Group, Fenway Sports Group, and Maple Leaf Sports and Entertainment in Toronto. And it's interesting because the public markets still offer immense challenges for teams. The cost to IPO is extremely high. I think becoming a reporting company means that your books and records need to be publicly audited and available to investors. And that's definitely a fact that most North American leagues don't love. I think in general, companies, I think we're seeing this in the venture market right now, but don't necessarily love giving up voting control to the general public. And then I think probably one of the points that's the most interesting here is just companies that have to adhere to the structure of public markets. It means you got to hit your short-term quarterly profit targets. And sometimes that's often in lieu of longer-term strategic planning. So what does the SPAC do here, right? And the SPAC was an innovation in financial engineering that really grew popular around 2019. I think at the same time as some other uniquely structured listing processes like reverse takeovers and direct listing were becoming popular, obviously with Spotify deal. Essentially, the idea is, you IPO what is termed a blank check company, a company with no operating history, and then you use that now public vehicle to actually acquire the private company to avoid much of the financial audit and preparation that would have been costly and time consuming if the private company had just IPO'd traditionally in the first place. So most SPACs are given a 24-month shot clock to find a company that matches their investment thesis, and then if they're unable, they're forced to return the capital to investors plus accrued interest. So, why does this matter in sports? And I think, back in 2020, we had several really well-branded SPACs. I think the terms are 53 sports figures and sports business SPACs raised around $20.5 billion in a piping hot market, many stating that they were going to target clubs around the world. And I think the most famous example here is Redbird Capital Partners. And They're the PE firm that owns AC Milan in Serie A, Toulouse in Ligue 1 in France, and along with a minority stake in Fenway Sports Group. But they first attempted to take Fenway Sports Group, who owns the Boston Red Sox, Liverpool in the Prem, Pittsburgh Penguins in the NHL, among other assets, public via their own blank check company, Red Ball Acquisition Corp. And, I think their failed SPAC attempt to Fenway Sports in what at the time was a really red hot IPO market probably underscores the difficulty, in bringing even some of the largest MCOs to market with these uniquely engineered vehicles with limited disclosure. So fast forward to 2023, and you have a lot of these SPACs that are still trying to find a home for the money or a private company that they raised in early 2021, and time is running out. So in late October last year, I think Front Office Sports reported that there was an unnamed US-based SPAC that was close to buying a significant stake in Italian Serie A club Udinese. That deal was supposed to include 10% of Watford in the English Football Championship, and I don't think we've heard much about that one since, but it might be the beginning of a trend, right? And now with the Eagle deal, I think it'll be worth watching to see if we've established this trend, if it's going to continue, and then even more so, what the success of these things are over a short and longer period of time, and if this starts to bleed over into US teams and markets. And with the post-merger median of US SPACs in 2022 down 70%, which is a pretty significant number, obviously going along with broader asset wipeout, it's certainly interesting timing. I can say things I've heard on the street are that banks are looking at the broader climate, thinking that we might improve in terms of economic conditions here towards the end of the year, and they're starting to kick tires and book build on some IPOs they might bring to market throughout the course of the year. And I think, once again, that 70% drawdown, you probably have to look at the numbers. If you just look at publicly traded sports stocks, they haven't seen that kind of correction that we've seen in other verticals of the private markets, obviously growth stage tech. And maybe this is just an asset class, a public market asset class, that shows that it can demonstrate some resiliency, particularly with the future so difficult to forecast and predict right now. The Everton SPAC is the only other one that comes to mind right now, and with the news that MSP Sports Capital is close to terms on a minority investment with them, those rumors have probably subsided for now. And I think it's just more evidence as well that these teams would prefer private equity as a liquidity alternative versus tapping the public markets. All right, we saved the best for last. And the third topic that we're going to go and touch on this week is what was really a wild week in women's sports finance. And I think since the beginning of time, the question around the commercialization of women's sport has always rested on critics saying that they'll never earn the TV contracts that are underpinning most of the valuations across men's professional sports leagues globally. And it's been rumored for some time now that there was a bidding going on for the new women's Premier League, which is essentially the counterpart, not to the English Premier League, but to the Indian Premier League, which is the top professional cricket league globally, located in India. And this week, we saw the Women's Indian Premier League cricket team's expansion rights sold for $572 million total. And to break down the stats, here's the approximate values for each team, and please forgive my pronunciation. Ahmedabad, $158 million. Mumbai, $112 million. Bangalore, $110 million. Delhi, $99 million. And Lucknow, $93 million. And I think the biggest question here is just what's supporting these valuations. And on January 16th, so just a couple weeks ago, Viacom 18, and I'm not sure if that's any relation to the US Viacom, but paid handsomely to the tune of $117 million US for a media rights agreement that's going to cover the first 5 years of the Women's Premier League and should really filter down to some of the most lucrative contracts that are now poised to be on the table in women's cricket. And this news was followed by the news of the National Women's Soccer League in the United States. And they announced that they are finally set to expand with record-setting $50 million franchise fees. So the NWSL is set to add teams in the San Francisco Bay Area, in Boston, and in Utah, with two of them, San Francisco and Boston, paying record entry fees. San Francisco and Utah are also set to begin play in 2024, with Boston launching a little bit later. Do some of these buyers know something we don't about what the next media rights cycle is going to look like for the NWSL? I'm curious what this means for its next TV deal, as CBS's current deal with the top women's soccer division in the United States expires at the end of the 2023 season, so this year. And that is currently a 3-year deal that's worth $4.5 million and was signed back before the 2020 season. So CBS, obviously as their old partner or current partner, is fittingly in the running for the next batch of NWSL TV rights. But, the competition in terms of other companies, other media companies, other platforms is not necessarily as stringent as it is, I think, for other leagues. And Apple, which holds the rights to Major League Soccer and the top men's soccer division in the United States, is one of the few in the running to compete with CBS. And this is definitely a number that will bear some watching. What's the bottom line here? I don't think, and I can't remember a week we've seen this much deal activity in women's sport, probably since the announcement that the WNBA had raised $75 million from investors, including Nike and Dell Technologies, Condoleezza Rice, the former U.S. Secretary of State. And this deal, which was done almost a year ago, according to PitchBook, was done on a $1 billion post-money valuation. And one would have to imagine, given some of the numbers being thrown around in the Women's Premier League, that without playing a game, the WPL may have actually surpassed this. The WNBA's current ESPN deal paid the league $27 million in 2021, and according to MedGal, the WNBA has set an internal target for their next round of media negotiations and for the value of their next TV deal at $100 million per year, which would obviously come below the $117 million that was promised by Viacom 18. And the kicker on this really is that this new deal for the WNBA that they're targeting $100 million for is not up for negotiation until 2025. And I think that in and of itself probably speaks volumes about the popularity of women's cricket in India and globally. And I think that this will definitely be a really interesting story to monitor as all of these leagues, mature and grow over the next several years. Thanks for listening to the Owner's Box podcast. Make sure to subscribe to the show and leave a 5-star rating. Sign up on our platform, subscribe to the Owner's Box newsletter, and follow FanClub Sports on your favorite social media channels to join the largest community of pro sports owners. This is FanClub Sports founder and CEO Dave Mirynech signing off. We look forward to sharing more sports finance and M&A news with you next time on the Owner's Box podcast.